Cassidy, Carl, and Meryl, we've made it. It's been a pleasure to work with you on this important topic of climate change. Who has been to the Conference on World Affairs? There we go, it's a good show of hands. So we are in our 75th annual Conference on World Affairs, and I think only Oak Thorn has been to every single one. So thank you for your support, and it's an honor to finally partner with Rotary here. In the 75th year of the Conference on World Affairs, it is important to note that we stand on foundations we did not put in place. Our Boulder community has welcomed the world for a week each April for 75 years, offering their time, their benevolence, and some of you your spare bedrooms, and so we thank you for that. Just as Rotary builds upon the four-way test, we at the conference do the same, which is to strengthen goodwill and develop better friendships. To that end, on April 12th through the 14th, for the first time in its 75-year history, we will be focusing solely on one topic, and that is climate change. With keynotes by documentary filmmaker James Baylog, Patagonia CEO Rose Macario, and an enormous wealth of knowledge brought by our panelists, such as the vital work being done on the campus by the Mortensen Center. Laura McDonald is in the back there. She is running the Collaboratory, which is the first of its kind, soon to be the Climate Sustainability Institute up on campus. So please ask Laura any questions on that as well. We have our staff at the conference, Esther Omegba and Hannah Wood in the back. So if you'd like to volunteer, if you'd like to be involved in any way possible, it'd be our pleasure to help out in that. And more importantly, thank you to our panelists today, Noelle and Michael. And I turn it over to Carl. Thank you.
Thank you. As a result of the Marshall Fire a little over a year ago, we in Boulder County are intimately aware of the tragic consequences of wildfires raging out of control. Today's program, though, is broader than just the response to the Marshall Fire. The 20 most destructive wildfires in all of Colorado history have occurred in just the last 20 years. The Black Forest Fire in El Paso County destroyed almost 500 homes. The East Troublesome Fire in Grand County demolished 366 homes. And the Marshall Fire of last year ruined more than 1,000 homes. A 2021 national study estimates that there are 374,000 properties in Colorado that are at high to extreme wildfire risk. That's 17% of all the properties in the state. It's the third highest percentage of any state, behind only Montana and Idaho, and ahead of California. There's widespread agreement that climate change contributes substantially to the incidence of more large, destructive blazes. To quote from a recent Insurance Information Institute report, warmer weather contributes to wildfire conditions in many ways. Drier and more combustible vegetation, more frequent lightning strikes, an extended fire season, more intense winds, and earlier spring snowmelt in mountainous areas, leading to dry vegetation earlier in the wildfire season. Our panel today is designed to address the question of how, if at all, the insurance industry, consumers, regulators, and lawmakers need to adjust to the new reality of climate change, and in particular, the increase in the quantity and destructiveness of wildfires. So we have a very big topic, very limited time. We're going to try to conduct this as a conversation among our panelists, with me asking some questions, and there will be the usual time at the end for all of you to ask your questions as well. So let's jump into it here. And the first question I want to ask, in addition, I'm going to offer you a chance just to greet people as you like. But I also want to ask a question, which is that in our advance promotion of this program, we called it a looming crisis in Colorado's homeowners insurance. And my question is, do you think it's a looming crisis? And if so, give us about one sentence on why you think it is a looming crisis, and then we'll jump into it.
I've got the mic, so I get to go first.
So we'll start with, and I'm not going to give extensive introductions, but this is Noelle Phillips of the Denver Post, a reporter here for 9 years and 20 more in other states. So veteran reporter.
Yeah, and I've been the lead reporter for the Denver Post on the Marshall Fire, which has led me to get to know a lot about insurance. When I was a younger reporter, like I've been a combat correspondent, and I thought insurance, like I would never, it's boring, right? But actually it's not, especially when you're older and own a home now. But yes, I would say that it is a looming crisis because as climate change continues to not just cause wildfires, but like the tornadoes in Kentucky, hurricanes along the Gulf Coast in Florida, insurance will get more expensive. We all absorb the cost of that when it goes up, and with, your gas is higher, your home utility bills are more expensive, your groceries are more expensive. I think a big issue is going to be affordability for everybody.
Thank you.
So I think Noelle touched on a really important piece that isn't self-evident to folks about how insurance works. So we have our state market in Colorado, but we are impacted by disasters that happen in other states, especially when they're catastrophic disasters. And that's in large part because the reinsurance markets themselves, they reinsure their own books of business. So the state farms, the Allstates, they buy reinsurance from big reinsurance companies. And the reinsurance market is impacted greatly by those big cats in other states. So do we have a crisis on our hands now? I think we have a looming crisis, yes. But it's not just because of the fires that are happening here. It's because of cats happening throughout the country and really throughout the world. And as climate change exacerbates those things, I think we're going to see a bit more and more impacts in Colorado.
And that was Mike Conway, our state insurance commissioner. And when I said I wasn't going to have long introductions, I didn't mean to say none at all. But he's been insurance commissioner for 5 years. Previously worked for the Colorado Attorney General's office handling insurance litigation. So we're going to jump into some specific topics right now. The things that have been a lot in the news about insurance issues that came to light in the wake of the Marshall Fire. And the first one is the problem of underinsurance, something that probably all of us shudder a little bit about when we think about our own insurance. So Noelle, you've done extensive reporting about this. Can you tell us just a couple of stories that particularly struck you?
Sure. So in the immediate aftermath of the Marshall Fire, all the homeowners start calling their agent, looking at their policies to see what they were insured for. And almost immediately, everybody starts saying, I don't have enough insurance. So for example, I interviewed a young family. They lived in a home that was valued at $1.3 million on like all the real estate websites. They had a policy for $392,000. Now your real estate value, the value of your home, it doesn't cost that much because you got to factor in your land and location and all these other things. But so the price of rebuilding your home is going to not be the full like value of your property. But still, they estimated that that would give them $100 per square foot to rebuild a 3,600 square foot home, which wasn't going to be nearly enough for what they have, especially when they factored into stuff like archway designs, these like imported wood floors. Like they had a really nice house with custom stair rails that they loved. So that's just like one example, and I could go on and on. Like I just got flooded with emails from people, and United Policyholders, which is like an industry watchdog group, estimates that every wildfire all over the country, about 2/3 of homeowners do not have enough in their policy to pay the cost to rebuild what they had. Lawsuits are starting to pile in, especially right now in Grand County from the East Troublesome Fire in 2020. There's a lot of lawsuits against insurance companies and agents saying with disputes over what I was told I needed versus what I actually need. Those lawsuits are starting to show up in Boulder County as well. There was one, for example, the couple had a $419,000 policy, which is what their agent told them they needed if their house was a total loss. They, in the lawsuit, say, we asked questions, are you sure? And the insurance agent was insistent, this is what we estimate you need. Yep, you need $419,000. They lost their whole house. The insurance agency gave them an estimate to rebuild at $555,000. They went out and got their own estimate to rebuild for $850,000 to get what they want. So if their $850,000 estimate is correct, their policy will cover half of that. And those are just like two specific examples of countless stories that I've heard reporting this.
Thanks. So Mike, at least in terms of what's come before with the recent fires, isn't this a little bit of a case of the toothpaste is out of the tube? Is there anything that regulators in the industry can do to put it back, or is this all prospective, what we can do about this issue?
So let me start with putting some more numbers and some more framework around the underinsurance problem that Noelle touched on. So when the fire happened, one of the first things that we wanted to do was get an understanding of how big of a potential underinsurance problem that we were going to have on our hands. So Noelle touched on United Policyholders. They do great work, but the work that they've done historically has been surveys to homeowners, asking homeowners themselves if they thought that they were underinsured. And it's about 2/3, Noelle's right, it's about 2/3 of folks respond that they think that they're underinsured. But we wanted to get numbers in. We wanted to get claims data. We wanted to get data in from the insurance companies to get a feel for how big of a problem that we were going to have. So we went out with a big data call to the insurance companies and got a ton of data in. The one piece of information that we don't have, Noelle touched on this too, and that we're not going to have candidly until we get to the other side of the rebuild is how much it's going to cost folks to actually rebuild. So we did estimates. We estimated at $250 a square foot how big of an underinsurance problem would we have. At $300 a square foot to rebuild, if the cost is $300 per square foot for folks to rebuild their homes, how big of an underinsurance problem that would we have? And then we also priced it out at $350 a square foot. What we found was at the $250 per square foot mark, about a third of the homes up that were lost are going to be underinsured. On average, those homes are going to be underinsured to the tune of about $100,000. Total for the community, the underinsurance whole at $250 a square foot is about $34 million. If you bump up to $300 a square foot, we were looking at about 50 to 55% of the homes would be underinsured, about $150,000 per home. So think about that. If you lost your home and you went into your insurance coverage and you had a hole of $150,000 to rebuild your home, that's what these folks were looking at. And the biggest bucket, at $350 a square foot, 2/3 of the homes are going to be underinsured. The whole for these homes, for those homeowners, again, this is an average. So there's going to be people that are far north of this, was at $240,000. That was the hole that those folks on average were going to have to fill. I can tell you, when we put out those numbers, we did the study, we put out the numbers for the community, we got a lot of very, very, very upset people with us that our numbers were too low. That $350 a square foot was what they were hearing from builders and what they were hearing from architects. Their dollar per square foot was going to be far north of there. I think what we're going to find, after we've had conversations with builders, and we built out those estimates based off of the conversations that we had with builders, but even as we're seeing the rebuilds happen, they're mostly coming in that window, the 250 to 350 range. There are definitely some very custom homes that are far north of that too, so nothing is uniform. But when we get to the back end and the rebuild happens, we're gonna reinforce the fact that we have a substantial underinsurance problem in the Marshall Fire. But it's not just the Marshall Fire, and it's not just Colorado, which gets to your actual question. The problem with underinsurance exists everywhere in this country. It exists every time there's a big fire in California. They've tried to do some things in California to really kind of correct for the underinsurance problem, increase coverage amounts, require insurance companies to, in their estimating software itself, do certain things and improve their estimating software. We're going to do that here too. We're going to do those. We're going to move in those directions here as well. But the problem, from my vantage point, is far more basic than that. Noelle really touched on it, right? It's at the very base level. The underinsurance problem exists everywhere because we have what I refer to as a pure competition problem in the marketplace. So we have insurance companies competing against each other based purely off premium. So if you are a homeowner and you're insured with insurance company A, and that insurance coverage is costing you $2,000 for the year, and insurance company B comes and tells you that, hey, I can provide you coverage for $1,500 a year, or an insurance agent comes and sells you that way, quite often people listen and they change. And they do that because they rely on what the insurance company and what the insurance agent is telling them. Because you should be able to rely on what the insurance company and the insurance agent is telling you, right? They are the experts in the conversation. The push that the industry has really tried to go forward with after the Marshall Fire, really around the country, that people have an obligation themselves to understand what it is that they're purchasing, and the onus is on you to understand what you're purchasing and to ensure that you have enough insurance coverage, is hogwash from my vantage point, right? There's always going to be times where people make a choice for all sorts of different reasons to decrease their premium for affordability reasons and other things. And when that happens, then you're taking the risk on yourself. But in the situation like what Noelle was talking about, where homeowners are listening to their insurance agent, they're asking questions of the insurance company, there is an obligation of the insurance company and the insurance agent to get it right. And we're going to be building towards that, right? We've got to fix for that pure competition problem that I talked about. That pure competition problem can't continue to exist, because if it does, then we're going to continue to have this very, very big underinsurance problem.
Okay, thank you. So we're going to switch gears a little bit here and just recognize all we can do is touch on the surface of a lot of this, a lot of these issues, and we'd love to go into more depth. But the second topic I want to talk a little bit about is the availability of homeowners insurance. We hear stories about people being denied coverage or being charged very high rates. So let's start with you on this, Mike. How big a problem is this?
So I would encourage you well, I'm going to talk about the availability and the affordability issues separately, because I do think that they're separate problems that we're going to have to find separate solutions for. So let me start with the availability piece. 2 years ago, I was in front of an interim committee, the wildfire committee, and they asked that exact question of do we have an availability problem in Colorado? We get data in every year. We do a survey of the insurance companies every year. It's a backwards-looking survey, but up to that point, at that committee hearing, I could honestly tell the legislators that we didn't, based on the data that we had, that we weren't seeing issues throughout the state. We weren't seeing systemic issues, at the very least, throughout the state. You're always going to have kind of one-off situations where people run into problems with getting coverage, and we historically have always been able to help those folks out. But starting August, September of this year, we started getting more phone calls into the division about people running into availability issues, getting non-renewed by their insurance company, and not being able to find insurance coverage either through what we refer to as the admitted market, which is all those big insurance companies, or even the surplus lines market. The surplus lines market is typically where people with really high value homes end up going to for really specialized coverage. But the surplus lines market also has the ability to step in when those big insurance companies don't want to provide coverage for some reason. Coverage was drying up. And it was drying up in certain pockets of the state with single-family homes, but in weird pockets, places that you wouldn't really expect. We were hearing about it to some degree in the Boulder foothills. That wasn't too much of a surprise, but it was obviously a concern. But we were even hearing about it in certain areas surrounding Pueblo in ways that didn't evidently, kind of self-evidently make sense. And then I started getting phone calls in from insurance agents calling me to tell me that we were having an availability problem in the state. And that availability problem was really more widespread than the phone calls that we were hearing about. It was going up into the mountain communities with condos and townhomes, and those single-family homes were happening in pockets throughout the state. So we're very focused on finding solutions for that. I think it's going to be part of the conversation this legislative session. To try and find solutions for it. Other states have solutions in place. They're referred to as, they're insurers of last resort, but they're often referred to as fair plans as well. And it's really a mechanism, it's a tool to step in when when the insurance market isn't there for folks. It's a tool for folks, it is that insurer of last resort. So that's the availability piece. The affordability crunch is going to be a tougher nut to crack, candidly. We're going to have to find ways to really build mitigation throughout the state, both parcel and community-wide mitigation, in order to try and decrease the prevalence of fires, but fires are going to continue to happen. And it's not just fires, it's also hail. Hail is a big driver of claims in Colorado. We are part of Hail Alley. So the affordability conversation is going to be a longer one. It's going to be one that's going to take us, I think, more time to find that solution, but it's going to be something that we have to focus on.
Noelle, jump in here.
Sure, I'll give you a couple of real-world examples that I've reported on the cost. It's really hard to get an insurance agent to talk to a reporter about how they're expensive and that they're having a hard time providing you with insurance. But I found one in Aspen because he was retiring and didn't have one risking his career. So he gave me a couple examples. One was a condominium association that had been spending $60,000 a year to insure $200 million worth of property. And when they were asked to renew this year, their first carrier said, no, we're not going to renew your policy. So now you've got like a whole condo association that doesn't have insurance. And they finally cobbled together 4 policies to insure the $20 million, and their insurance bill was $600,000. So they went from $60K to $600K. So, the ripple effect, like if you still have a mortgage on that condo, you can imagine how much your mortgage bill went up to help pay for that. So, and then I've had people even in the insurance go, well, Aspen isn't exactly low income and these people can afford that. But when this starts trickling down to like everyday homeowners like me, I'd probably have to sell my house because reporters, we don't own Aspen condos. We just don't make that much money. So there's like what's going to happen with affordability here. And there's all kinds of criticism of the insurance industry. They have to pay for Patrick Mayhomes, the Mayhem guy. I hope Liberty Mutual doesn't pay a lot for the emu, but they pay for these commercials that cost a lot of money, and there's a lot of marketing into it. And at the end of the day, especially if you're a young homeowner or it's your first home and you're stretching your budget to even buy the thing, you're going to go with the lowest insurance policy possible. But then, what does your coverage look like? And so I think affordability will eventually become an availability issue. So, if I can't afford homeowners insurance, then it's really not available to me.
Okay, the next topic is one I've heard a lot less about. Maybe I haven't been paying enough attention, and that's inventory requirements for personal property. Can you explain that to us? And we need to be briefer on this one because we're falling a little behind on my schedule.
Basically, you need to know every piece of anything you have in your house, from your wedding rings to your underwear, because when your house burns down, to get your money back on your property that's covered, like personal belongings, the insurance company's gonna want an accounting and an inventory of everything. So all your bicycles, all your basketballs, all your artwork, all your furniture, your dog's toys, you name it, you need it now.
It is the single most challenging thing that people go through when they have a total loss. That's not true for all insurance companies, to be fair, but it's the insurance companies that have the strictest inventory requirements in place. It is a nightmare for people, and I don't use that word sparingly. It is truly a nightmare for people. They end up having to relive the fact that they've lost their house over and over and over again, because it takes them weeks for some folks to put these inventories back together. And then they fight with their insurance company about the inventory and what's on the inventory and whether or not they had it. And some of the fights, some of the stories that I could tell you would make your blood curdle. Because it's just nonsensical, some of the requirements that insurance companies have put in place. So Judy Amable, Representative Amable, who is most of your representatives, or most of yours representative, she helped pass a bill last year that gave us the authority to require insurance companies to streamline their inventory requirements. And we're in the midst of building out that regulation literally as we speak. I spent about 3 hours yesterday working on that reg. So that's going to help immensely, but it's a huge problem for folks. It truly can be a nightmare.
Okay. So we have three major players in this field. We've got the insurance industry, we've got consumers, and we've got the regulators, and I'd include the lawmakers in that. They stand behind the regulators. If you could, what do they need to do, each of these, to adapt to climate change? If you could do, say, one thing for each one of those three sets of players, what would it be?
Every time I report on this story, I ask the insurance industry, what are you doing to slow down climate change? And I get a nonsensical, like, word salad answer. So I would imagine that would mean nothing, but I would think that if anybody has an interest in climate change, it would be the insurance industry that should be lobbying Congress and state governments to put in policies to, like, reduce the harm we're doing to our planet. I do know they spend a lot of money on lobbying, but it's usually things to protect their financial interests and perhaps not protect the interests of global well-being. But that would be what I would recommend. And there's one way to get that done. It's for people like you who vote and are engaged in your community to put pressure on your politicians and your insurance industry.
So the industry, what can the industry do? I think the industry can do a lot, and there are different facets of the industry are trying to do different things. They're getting a ton of pressure. The ESG, which I can never remember what the acronym actually stands for, but it's essentially trying to get the industry at large to focus on climate change. The ESG conversation is a very, very hot topic out there. You have states that are moving in the exact opposite direction of what Noelle was just talking about and requiring all industry, including insurance companies, to stay invested in things that are causing climate change, right? To stay invested in renewable, or not to invest in renewable energy and to stay invested in the problematic parts of the world when it comes to climate change. What can regulators do? Regulators, I think that there's two different facets of kind of thought when it comes to regulation. There's you're just kind of a traffic cop where you wait for the legislature to pass laws and then you go and you implement those laws, but you don't try and drive the policy conversation. That is not the type of regulator that I am. I'm very much at the table trying to drive the policy forward. We are very much at the table at the Division of Insurance trying to drive the policy forward, and we're going to continue to be that way to find solutions for the problems that we're facing in the marketplace. I can tell you that the legislators themselves are keenly aware of all of these issues that we've talked about today. And I think you're going to see things moving this legislative session because of that.
Do you have a package that you're presenting to the legislature?
We're working on a variety of different bills that will be moving forward. There's some homeowners bills, there's some health insurance bills that will be helping to move forward. So the short answer is yes. The long answer is I'm not going to tell you what they are yet because I haven't introduced them.
Okay. All right, so I've had my turn asking questions. Now it's your turn in the audience and on Zoom, and we'll try to alternate as long as there are questions in both places. Let me ask, though, that you please keep your questions short and to the point. We recognize that some of you have had traumatic experiences because of wildfire, and with all due respect to the tragedy that you've experienced, we urge you to find another time or place to share your story, because we want to focus on these solutions that our experts today have to offer. So where's Vanessa with the microphone? There she is. So introduce yourself, please.
Stan Goralnik. Insurance companies set premiums on automobiles based upon what automobile it is. So, you know, a Subaru costs less for insurance than a Honda does, for instance. Does the insurance industry for fire and what have you charge everybody the same thing, or do they charge more for the, depending on where your house is?
So the only line of insurance where things are close to uniform is in health insurance. Everything else is incredibly complicated. So the answer to your question is yes, it depends upon literally everything, every component, both where your home is located, the materials in your home, the amount of mitigation, depending on where you are in the state, the amount of mitigation that is on your own individual parcel, but then also in the community can impact it. It can be impacted in a ton of different ways.
Noelle, anything to add on that? Okay.
Great. We have a question on Zoom. If you would unmute yourself, please.
Okay, let's go in
All right.
the room.
Are you speaking to me?
Yes, please.
Okay.
Please identify yourself.
My question is this. I'm wondering if there's anything that legislation can do to make legal recourse more available to consumers. You know, what the community has found in the wake of the Marshall Fire is that the insurance industry will delay and bleed people of resources until they go away. And unfortunately, disaster survivors are at their most vulnerable financially and emotionally. And it's just not realistic to expect that they can afford legal representation that goes on for months and months and months. And I'm wondering if there's any discussion around what can be done to limit this kind of behavior by the insurance companies so that they can avoid accountability for bad faith.
So there's laws on the books now that actually speak to the exact type of situation that you're talking about, ma'am. There's what we refer to as unreasonable delay or denial laws that prohibit unreasonable delay or denial. And if there is unreasonable delay or denial, that you can sue, and we can actually enforce those laws as well. So if we don't have a complaint from you, please, I would encourage you to reach out to our office and file a complaint so that we can look into what's going on with whatever happened. But in potential litigation, there are also components of that law that would allow you to recover attorney fees and costs if there is actually unreasonable delay or denial that's found in the litigation. Now, I fully understand that that's not a workable or a viable solution for folks for a whole host of reasons, but that's why we're there in the first place. That's why I would encourage you to reach out to our shop. You can go on to doi.colorado.gov and find a place to file a complaint. It's essentially a 2-click process, and you can file a complaint with us, and we can look in and see what we can do to help.
Okay.
Great presentation today. Thank you so much. I'm Leslie Hers, and I wanted to ask about additional living expenses because it sounds like with 2/3 underinsured, most people seem like they only have 1 year of living expenses, and how might that be changing in the insurance industry?
So there's a few different moving parts to that. It's not the case that most people have 2 years of additional living expenses, but there was a group of people that only had a year of additional living expense in their policy. So we obviously just hit the 1 year mark. We went out to the insurance companies and asked them to extend additional living expenses for those folks that only had 1 year and extend it up to the 2 year mark. And we told them that we were going to publish names for those that chose, publish names of the insurance companies that chose to meet our ask, and also publish those that chose not to. And lo and behold, they all agreed to do it. But Rep. Amable's bill from last year that I touched on before, it also extended the requirements for additional living expenses. It's not going to help the Marshall Fire folks or the East Troublesome folks either. But now, if there's a wildfire in Colorado that's declared by the governor as a wildfire, you have a minimum amount of coverage, 24 months up to 48 months, depending on the exact situation. So regardless of what's actually in the policy, the law will require that coverage to be in place.
Great.
John Kotke. I want to go back to the underinsured issue a bit. Is there, it's an incredibly complex issue, but it seems to me that the best approach is to, I mean, if you can afford it, you know, bump your reconstruction cost up to $500 a square foot or whatever. Is there a danger that you can be paying more for insurance? I mean, would the insurance company only have to pay fair market value even though you have paid a per square foot reconstruction cost of $500 a square foot, and they say, no, we're not going to pay it because the market value is not that high?
I feel like I'm hogging the microphone, but the short answer is yes. So the insurance company is required to replace the home that you had. So if in your hypothetical situation, if the cost to rebuild your home was only $400 a square foot, that's what they would pay. But what we also heard, I mean, the stories, and Noelle knows probably just as many stories, if not more than I do, talking to homeowners about these types of situations, is what can happen within the marketplace is when you as a homeowner go and say, I want to bump up my coverage to $500 a square foot, insurance companies say no sometimes. That was the exact story that Noelle was effectively talking about. And they do that, and not to defend the industry, but to some degree, they have gotten hit very hard in other states, and we're talking about decades ago, for overinsuring. And they had huge penalties as a result. So they still have that ingrained in their DNA in strange ways. And it's also just it's when you're talking about a big corporation like this, the person that you're talking to on the phone is just following the orders of what they're told to do. They don't really understand why, whatever it is that they're saying yes or no to, why they're saying yes or no. But there's a lot of different moving parts to that.
Thank you. Carl, how many more questions can we take?
I'm sorry?
How many more questions can we take?
We can take 2 more minutes, so depending on how long they answer, it's 1 question or 2.
Okay, I think appreciate you guys being here and doing a great job, and Carl for moderating. My question concerns there's actually 4 legs to this table with affordability, availability, and underinsurance. And I don't want to be, defend the insurance companies. I know they're doing things wrong and so on, and both of you are there to help us in that regard. But I think the 4th leg is profitability. And if they're being honest, which most people are to some extent, the business model is no longer sustainable, and it will get worse and worse with climate change, which was the start of this conversation. So I'm wondering how we're going to work out so the insurance companies can make an honest profit and keep insurance people.
So the industry at large is still profitable. They haven't been all that profitable in Colorado homeowners insurance industry over the last few years, in part because of these fires. But the insurance industry, one of the things that it is extremely good at is adapting to whatever is happening in markets. Sometimes it takes them a little bit of time, and that's where the FAIR Plan, the insurer of last resort, can come into play, and it can provide that relief, that time for the industry to figure out how to adapt and how to respond and how to get the market itself to adapt and respond. But a component of it's going to be mitigation across the board for really kind of the foreseeable future. If we don't find those types of solutions, we will have growing availability problems. And then we could find ourselves in a situation where we have the federal program that will necessarily have to step in, like what happens with flood insurance. That's not where we want to end up with anything. That's not the greatest program in the world.
One of the things we haven't addressed is how the insurance agent that you talk to gets to the price. And so they have one set of software that gives an estimate for underwriting and what they say you need, and that's like a computer formula that they add in, like square footage, your foundation, the age of your house, the size of your garage, on and on and on, and they pop out a number and go, this is what you need to be insured for. When you go to make your claim, they have another set of software that does the estimate to rebuild, that does not talk to the one that gave you the estimate for your underwriting. I think maybe if they got those on the same page, that might help some things, but as it is, there's like these huge software companies. CoreLogic is one that provides these to all the insurance companies, and that's what they use. And so they don't talk to each other, and that right there seems to be a problem. I've reported on that as well.
Okay, well, thank you. And I want to offer each of you 1 minute for anything we've forgotten or a major takeaway you want our audience to have.
Well, this is my pitch for subscribing to your local newspaper. Because the way we make a difference in this world is to speak out and to be informed. And a great way to be informed is to subscribe to the Daily Camera or the Denver Post or whatever you choose that's covering these things. Everybody's Excel bill this year has just skyrocketed, and I look at Nextdoor app every day and people are going, oh, I didn't know. Well, I can't tell you how many stories the Denver Post has written in the past year about Excel going to the Public Utilities Commission and asking for rate increases and getting them. So if you subscribe to your paper, it wouldn't be a surprise. It's the same with this insurance issue. Like, we're covering it, and we're doing it to inform homeowners, not just the ones who were hurt in the Marshall Fire, but those who might be at risk in the future. Because I want you to know this. I want you to see these issues and these problems, and then you can talk to your insurance agent about, well, I've read in the Denver Post that this is probably not enough and I want more insurance coverage. You can go to your state legislatures, your congressmen, and say, do something about this, fix it. Because that's the best way to is when people unite together. And it starts, I think, with your local newspapers, digital media, radio, TV, whatever, pounding on this to educate everybody.
I totally agree. Mike Conway, Mike Conway, not Mike Conway, the insurance commissioner, because I might get in trouble. But I agree with it. Subscribe to the Denver Post. I subscribe to the Denver Post. I think my main takeaway, folks, is go home and look at your insurance policy and see if you have enough insurance coverage. The math is relatively easy to do. You look at whatever your cap is, whatever the max is on the policy. You divide that by your square foot. The square feet of your home, and that'll give you the cost per square foot that you'll have to rebuild if you have a total loss. My guess is that you are underinsured. There at least is a decent probability that you are underinsured. If that's the case, call your insurance agent, call your insurance company and tell them that you want to increase your coverage, or at the very least have a conversation about how much it's going to cost you to increase your insurance coverage. Because when this happens to folks, it's devastating. It truly is. We're going to do everything that we can to start getting better information to people when they buy a home, when they buy an insurance policy, and then when they renew as well. But I can't encourage you all enough to go out and just take a look at your insurance policy and see if you think you have enough insurance coverage.
Thank you to both of you. Marty Evans, please.
Thank you so much for being here. I would imagine speed dial will be going this afternoon to many insurance companies. You've been both informative and also maybe helped us put a little face on it, whether they're family, friends, or some of our members who have experienced a variety of these challenges. And speaking of challenge, one of the things that Rotary had done about 35 years ago, realizing the major health problem with polio. Since that time, we've been partnering with the Gates Foundation, and we say we're about this close to eradicating polio. In your honor, both of you, for Nicole and Michael, we're donating 100 doses of vaccine to the Polio Plus Fund. So thank you so much for being here and keeping up the good fight.